Hey everyone, welcome to the daily analysis for GBP JPY, April 22nd, 2009. The time is currently 7:10 GMT. We're looking at a monthly chart right now, and I just wanted to point out that on the monthly chart we are still bearish, and I've drawn the CCI line right here that I have, and you can see that right now the market on a monthly scale is currently testing a bearish trend line that we do have, and the current candle, as you can see, I mean it's already got an 850 pip wick, and it's an ideal candle, if not maybe a little bit lower, for a temporary reversal, which might add to our bearish sentiment of breaking this lower trend line, which I'll get to in a second. So just wanted to throw that out there really quick. Moving down to the weekly chart. I had mentioned last week that at the beginning of this week we might have a bearish opportunity to trade, because we were confirming a break of the trend line last week, and so when this week opened, all we had to do was break the lows over here, which was that 145.70 area. So on a weekly scale, this trade has already worked out, and we're hoping for it to go a little bit more, but right now the trend line is in our way. So on a weekly scale, that's just the CCI trade right there. Going on to the daily. Okay, so yesterday, when the market opened on Sunday, we had an enormous breakout from the 145.70 level. I know that those of you who were following Nick's method, he was using the 145.50. The market to me wasn't using the 145.50; it was using the 145.70 and 78 level. So if you did take a short from the 145.70, 145.78, your trade would not have been stopped out, and you would have made anywhere from 50 to 400 pips. So it was a great trade. I viewed it as a very strong line because it was holding price up for over 2 weeks. So yesterday's bullish candle, a lot of you might be immediately gearing up that this was a solid bounce off of this lower trend line. The reason I say don't kind of jump on a bandwagon too early is, remember what I said about the daily candles and their wicks right here. Right here, 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 here. Every time we did bounce and we did move away from this bullish trend, there was a solid daily wick. In the same day, it pushed up and went further. It bounced off the trend line, maybe 300 pips, and it was a solid reversal setup. In this case, we had ranged for 2 weeks right above this 145.70 level, and in one day, we plummet 550 pips right to the trend line, and we stopped there for the day. The next day, we bounce off in a bullish direction, but what we failed to do, and this is kind of really key to keeping a bearish sentiment, is we failed to break above this 145.70 level again, and we're already on our way back down, and we're already 200 pips bouncing off this area. So looking on the CCI, this is our bearish trend, and you can see that yesterday, or at the start of the week, we were completely in the extreme levels. There was a little bit of a pullback, but we stayed below an important mirror resistance, and we're starting to curve again, which could lead to a retest of this kind of bearish trend. Might be the catalyst that gives us the opportunity to break this lower trend line. So I just wanted to throw that out there, and don't be too alarmed by this this daily candle. It could mean a bullish reversal, but what really needs to happen for the bulls to really gather steam is a break above the resistance that was supporting us for over 2 weeks. And I mentioned it in the chat room that I thought it was completely unlikely that we were going to undo an entire 500 pip breakout in one day, the next day after it, and we actually did surprise, and we made it to 145, um, which was an opportune time to sell. But I don't expect us to keep going up, and I am bearish right now, so just wanted to kind of get that out there. So 145.70 is still a key level. If the Bears fail tonight or tomorrow, this level is still going to be important. And for this bearish breakout at the start of the week, we're still looking at 145.70 is holding it down. So zooming into the 4-hour chart, you can see that CCI-wise, we actually are about to confirm a break of a CCI trend line, which is more than likely just going to lead to an immediate retest about 80 to 100 pips lower than we are right now, near the 142 level. And on the short side, you may want to look at going short on a breakout of 142 if you're really aggressive. However, I'm still going to be waiting for a break of the 140-140. It's going to be a new daily low, and it would just add extra selling pressure because we'd already be outside of this lower trend line, and then we would have a new low in addition to that, and from there we would most likely see a major drop near the 135.80 area. So a little wrap up for those who did take my advice yesterday. I did sell at 145.00, and if you still have that trade, it is nearly 200 pips in profit. So if you're only looking for 50 pips, you got it. It did take quite a bit of time to get going. These first two candles at the top did not do a lot, and it took the start of the new day to kind of get things rolling. So I'm still looking at a break of this lower trend line and still waiting for the 140-140 now. I have closed out my bounce off 145 trade for about 150 pips. If you're still in it, you can lock in profit or just hold it, see how far it goes, but you should not let this trade be a loser anymore. If we break back above 145.70, you might consider going long here. I'm gonna wait for us to go above 145.70 to enter a buy position. I'm not going to use this 145.14 high, just because this did stop under the mirror resistance. So I'm going to use what was actually supported for a break to be bullish. So I'm bearish unless we break above 145.70. Short-term trend lines on the 4-hour, you can see that we had this trend line on the top. We never quite made it. The bounce did happen before it, and we're obviously still on the way down. What else? Zooming in onto the 1-hour chart. Here we have last hour we had a wick that extended up all the way to 144.41. This candle itself could have been very bullish, but it closed severely bearish, and in a bearish trend right here on the 1-hour chart, this is a huge signal on this candle that you have a retrace and then it pushes down. That's a huge signal that you're probably short-term going to be going lower on the 1-hour chart. Obviously, even off the 1-hour chart, we have this the major daily trend line supporting it at 142, so keep an eye out for that. Other than that, there's not a whole lot going on. The trades I'm waiting for now are a break below 141.40, and if we do happen to get back up to 145.70, I may consider another selling opportunity, but this time I'm going to wait for a reversal candle off the 1 or 4-hour chart. Hope that makes sense. As always, pay attention to support and resistance that forms throughout the day. Keep an eye on this lower trend line and make sure all your trading decisions are safe and smart. Thanks.